So for most part of this year, we have seen weakness in the tech sector, alright, in the US market as well, even in the Singapore market, we have seen the tech stock selling down since last year, end of last year, even the beginning of this year as well, due to talks about rate hikes and all that. But over the past 1 to 2 months, we are starting to see some strength, right, coming back in some of those stocks, not all, some of those stocks in the Singapore tech sector. So in today's video, I'll be sharing with you just 2 stocks that you want to put in your watch list because there are definitely some signs of reversal, right? So what are these 2 Singapore tech stocks? Hey guys, Joey here, top tier reminder trader in Philips Securities, and I'll be sharing with you these 2 stocks, and we'll dive into the charts to see what it says, and maybe even in the system that I have to see if there are any signals that have came out over the past few weeks or past few months, and are there any signs of reversal, and if we should start positioning ourselves in it, right? So this is pretty much 2 stocks I've shared with you. So these are some of the popular Singapore tech stocks. We have AEM, Franken, Inotech, ISDN, UMS. Those stocks were really strong, all right, just last year they're just pushing higher and higher, but of course as we began 2022 we started to see some weakness, but right now 2 of them are looking quite okay, right? So let's dive into the first stock right now, and the first stock I share with you would be this company called AEM right here, trading at about 4.39. So let's dive into the chart of AEM before we dive into the second stock that you definitely want to put in your watch list as well. Let's go. So this is AEM right here, trading at about $4.39. I would say that this is one of the more stronger blue chip tech stocks, and we have seen a bit of a support coming back over the past few months as well, right? So let's see what are some of the levels that you want to take note of where you can potentially position yourselves again to ride the reversal upwards, right? So right here you can see about $4.39 we have kind of like sold off. Let me just show you what has happened. So we have kind of like traded higher all the way to end of last year December, all the way to like $5 to $5.40 consolidated, and then we kind of broke this support level. Look at this right here, the $5 was a critical support level that we broke down. You can see when we broke down, we sold down all the way to this support right here at about the $3.90 that I've talked about many times in some of my Facebook live session as well as on my videos as well. This $3.90 is a very, very key support level. Why? Look at this, right? We have been rebounded from it many times last year as well in 2021, 1, 2, 3. All right, this is where we kind of broke up here, and the resistance has turned support, and so a couple of touches, a couple of rebounds from the 390 level, and when we sold off all the way in March, rebounded, and you can see we came back down here again, right, to near 390, and we have rebounded again somewhere around July, all the way up here, right, to about that $4.75, $4.80 level, right? So that is this really key support level that you want to take note, and that's the $3.90. I think if we were to head to that level, maybe near that level again, it could be a really, really good bargain, very, very attractive level if you want to time your entry to catch the rebound back up again. I think 390 would be a very decent level, but I'm not too sure whether you hit to 390. I think right now we are in fact seeing some support coming back at this higher level, right here at about $4.30. Why? Let me explain to you, right? So you can see, right, this $4.30 was pretty much the resistance level. You can see a couple of touches we came down when we broke up, the upside started, right, and it was a little bit of a resistance here. You can see a bit of a support here. We broke down, and that's where we came up just recently in July, started to trade up here, and we are pretty much coming back down here again, right, to that $4.30 support level. So $4.39 is where we are right now. I think if we were too near that $4.30, all right, hopefully we see some good reversal action here. If that's the case, good, then we might start to see a rebound back out. It might consolidate in this range. If not, right, if we were to kind of like break down that $4.30, yeah, then unfortunately we might see a bit of weakness again all the way back down to that $3.90, which would be a much better level. So I think anything above that $4.30, all right, that's where I think you can also think about getting in, but of course have a plan in case it breaks down. You can probably save some bullets to accumulate more near $3.90. That could be a long-term position to think about getting in again to ride the reversal. Right, so this is AEM, one of those stronger tech stocks whereby we did see some good support coming back over the past 8 to 10 months already. All right, and we have rebounded up, and it seems like selling is starting to come back, which can actually provide a good attractive opportunity. All right, so what about the resistance level? I think right now you can see that this is the target right here at about the $4 and okay, let me just show you right here, about $4.70, right, $4.70. You can see this is where we have touched. Let me just draw it for you. You can see this is where we kind of like touched just about 2 weeks back. We sold off, right? You can see it was originally the support here, same thing. We went up, supported, and we broke down, we came down. Look at this right here, right? This is another resistance level. So about $4.70. That is pretty much the range right now. Let me just draw it for you, right? So it's about 430 to 470. That is the range. If you can hold above 430, I think that's the 40 cents range you want to take note of, all right, to catch any rebound. And of course, as I say, if we do break 430, then it might be back to that 390 to 430 range. Look at this, right? It fits really nicely. You can just push it back here. Okay, so this AEM, I hope I've given you an idea of where you could potentially think about getting in to load up, all right, to catch more upside for this stock. So here is AEM on my OneGT system, one good trend, whereby we had a couple of bullish and even bearish signals that have guided us over the past few months, right? So just last year, it was actually one of those really good bullish stocks. Look at this bullish signal up in October last year. In November, started to push up from like $4 to about that $5.20, and then got exit, and then we saw a couple of like red arrow down, all right, pointing down, like a bearish signal started to push down. As I say, it broke that $5 and started to see weakness from $5 all the way down to maybe about the 420 level, all right, consolidated, and we got a bullish signal, went up again. But let's just zoom into where we are right now. So I mentioned, right, we kind of like found a little bit of a support back at the 390 level. We got a new bullish signal coming back, went up, and then a couple of exit signals came out, and right now we got this little bearish signal coming back. So we might see a bit of weakness, right, a bit of weakness coming back, let's say, towards the next support about 430. If that were to break down, then I think this bearish signal might start to play out. It might even go to that 390, and then hopefully it stabilizes, and an exit signal comes out, and maybe we might see a new bullish signal like what we saw over here again. All right, so yeah, this is what it says on my system, right? A little bit more short-term bearish because we kind of broke below the temporary support at 450. All right, but let's see if it can hit lower, and that's where you can provide a new attractive opportunity to catch the reversal back up again. So let's move on to the second stock I share with you, and that would be UMS, that is in the Singapore tech sector. And by the way, guys, if you like this video, I would appreciate if you can give me a thumbs up. That would definitely help out the channel, and of course smash the subscribe button as well, so that you will not miss out on any videos like this. Right, so this is UMS right here, trading about $1.31, one of those really strong, I would say, Singapore tech stocks that have seen a very good run up in 2021, 2020. We went up from like about $1 all the way to like 150. Saw a bit of weakness when the market started to sell off, the tech sector sold off. UMS also kind of like suffered and went to a low of about 110, and managed to find some support coming back, and in terms of the reversal of the trend indicators as well. So let's see where we are right now. So you can see that I've drawn this upward sloping channel support line right here, kind of like connecting the low since 2020. You can see a couple of touches right here whereby rebounded, and kind of like touching the lows and forming what we call higher lows, right? So kind of like neared it, rebounded, same thing, we neared it, rebounded. So I would say that this channel support line is pretty much a sign whereby the trend still looks quite okay, all right, in terms of the 1 to 2 years period. It's starting to look good. I mean, especially if we hold above this line, all right, and there are definitely some signs of the trend turning up as well. So look at this right here. This is where look at this 20 days moving average. You can see this 20 days moving average is a short-term moving average. You can see that we kind of broke down this 140. Look at this right here. So this is the 140 support level whereby we were actually consolidating quite well somewhere around like January 2022, and then we broke down. Obviously, you can see this green line started to just point down. We have kind of like cross below, this is green cross below the red line, so not so good in the short term, and you can see it started to sell all the way down to about 110, and then you can see that this green line started to stabilize and flatten out a bit, and right now it is starting to point back up. And of course we got this bullish crossover back again, whereby the 20 days moving average have crossed back up above the 100 days moving average, right? Look at this, right? So this was where we crossed down in January, and finally in August, right, after about 8 months, we managed to come back up again, and that could be a sign of more strength in terms of the upside reversal. There's more strength coming back again in terms of the trend starting to take shape, to turn up. Alright, so that's the sign, right? And the thing here is that we kind of broke above this resistance level. This resistance level is about $1.25. You can see a couple of touches, support, we broke down, and finally, right, just about 1-2 weeks back, we managed to break above this 125 level. So that could be a sign as well, alright, with the short-term trend indicators turning up. We kind of broke some of those key resistance levels. That can all point to a reversal slowly starting to happen. So I would say that upside targets could be from 125 all the way to about 140, right? Same thing, why 140? Well, because 140 was that support level that I talked about previously. We broke down, so this support has kind of turned to be what we call the resistance right now. So we might kind of like see a bit of profit taking as we hit to 140, 135. I think that's where we are seeing some selling over the past 2 weeks, but I think it still looks good if we can hold above that 125 to 130 level. That is pretty much the key support level for now, and you see that this is also where the 200 days moving average line is as well. And look at this, right? In fact, I think not even 125 over the past 1-2 weeks, it seems like 130, right? So we can actually like shift this line up here, right? You're going to shift it up to tighten it up. 130 seems like a much I would say a nearer support, all right, because over the past 2 weeks it seems like we have found a couple of rebound from that level, all right, and also where the 20 days moving average is. You can see it's still sloping upwards, prices above it, so it looks quite good in the short term, right? So I think, yeah, it seems like 130 is kind of like a nearer support, but I think I'll just put it back to 125 for now, just to give it a bit of leeway, because that is kind of like a critical support level. All right, so here is UMS. I think it still looks quite good. All right, there are definitely some signs of a reversal happening. Of course, if we break the 140, right, 140 level, I think upside could be all the way up to that next one. Look at this, right? So I can like shift this up here from 125 to 140, all the way from 140 to 155, right? And why 155? Look at this. This is where we had a couple of touches. There's a bit of resistance in November, December last year. So potentially, if we break that 140, 155 could be the next target, right? So you see how how nicely it plays out. You can just shift this from here to here. All right, but right now I think that is the immediate upside target range. All right, so let's take a look at what it says on my OneGT system as well. Okay, UMS on my OneGT system right here, or you can see that since 2021, a couple of good bullish signal. You can see the trend bar is green in color. It went up from like about 90 cents to $1, and we had just had bullish signal, and prices started to push up. Another one here went all the way up, and this was where we were consolidating. I mentioned like about a 140, and then that was where the trend started to turn down. We broke some key support like the 140. Look at this right here. We got a bearish signal. It went all the way down, right? And another bearish signal went all the way down, and of course the bar started to turn from green to red, whereby it's a little bit of a downtrend. Right, but as I mentioned, right, it started to consolidate, and we managed to find a little bit of a bottom. All right, and let me just zoom in right here. I think just recently on the 20th of July, we got this finally we got this new bullish signal coming out and started to push up. Another bullish signal coming out, started to push up. So it kind of like went from like 110 to about 130 plus, and about like 1 month plus, right? 1 month plus. So yeah, right now we got an exit. But as I say, right, it remains to be seen, because as I say, we hold above at 125 to 130, we might potentially see another new bullish signal coming out again, which can kind of lead the reversal higher. And you can see that the bar has turned from red to green already. All right, so it's a green bar. We see a new bullish signal like what we see over here on 20th July or on 15th August. That could be a sign of more strength coming back, and that could lead the upside reversal firmer. Alright, so this is UMS on my OneGT system. So there we have it, guys. I've pretty much covered 2 Singapore tech stocks that you can put in your watch list for potentially more upside. Alright, and these 2 stocks are AEM and UMS, right? Pretty much the 2 strongest one, I would say, for now, and there are some signs of reversal over the past couple of months. The rest of it all still looks a little bit weak, right? It still looks like it's a bit downtrending, no clear signs yet, so probably not talk about them. But these 2 stocks, AEM and UMS, definitely some signs of the trend starting to turn up, and that's where you can definitely think about putting them in your watch list as well. Alright, so yes, that's it, right? So I hope you like this video, guys. If you do like this video, make sure you like, right? Give the like as well, and smash the subscribe button so that you will not miss out on videos like this. And of course, let me know in the comments below what's your takeaway on these 2 stocks. And if you want to find out a little bit more on how you can have a system like this to guide your entry and exit, or maybe the whole entire framework, behind the system as well, go ahead to click on the link around this video. I'll probably put the link somewhere. That's where you can attend one of those free web classes that we're still running. And I look forward to share with you a bit more on how this OneGT system can actually help you. Thank you so much for watching. Joey here. Take care.